again, we've got this foreign direct investment coming in. So where is that capital going to be put to use? And what is going to be the big unlock? My mental model for this particular cycle is the everything, everywhere, all at once cycle. So we're seeing the asset management that the fiat world companies are building on rails from crypto land. So, this is Franklin Templeton. This is all of these people looking at tokenizing real world assets. I think that starts, the first wave of that starts. So I'm just thinking it's actually going to be broader than people imagine. And it's going to be more inclusive because we've now got this trade deal, the ETFs, because I think, we've got the Bitcoin one certainly coming, and it's a pretty high chance we'll get the ETH one as well.
As we approach what many anticipate to be the most significant crypto bull market in history, cryptocurrency investors are eagerly seeking the key narratives that will drive substantial growth and unprecedented price gains. In previous bull markets, the identification and alignment with the right narrative proved to be the distinguishing factor between investors who made moderate returns and those who experienced extraordinary gains, ranging from 10x to 500x and beyond. During the last two cycles, the prevailing narratives were centered around currency coins, Bitcoin derivatives, and notably, non-fungible tokens, decentralized finance protocols, and thriving Layer 1 projects during the 2020 and 2021 crypto bull run. NFTs, in particular, saw astonishing figures, with individual tokens fetching tens of millions of dollars. For instance, digital artist PXS The Merge sold for a total of $91.8 million on Nifty Gateway in December 2021, attracting interest from 28,988 collectors who collectively purchased all 32,670 units. With the bull market re-emerging after a prolonged crypto winter, the focus shifts to the key narratives that will drive massively wild gains. Real Vision founder and CEO Raoul delves into the upcoming crypto bull run, envisioning a scenario where multiple aspects of the industry develop simultaneously. According to Powell, there's a near certainty that the U.S. Securities Exchange Commission will approve a spot Bitcoin ETF, with the potential for approval of another for Ethereum. Powell predicts that this approval will result in tens of billions of dollars flowing into the industry as wealthy traditional finance players seek to diversify their assets from the uncertainties of fiat into the crypto world.
Please take a moment to like this video, subscribe to the channel, and don't forget to drop your comment and observations in the comment section below. Thanks and enjoy the video.
Yeah, let me frame it for people in a way that people might understand it better. So I think many of us know by now that we're building some sort of digital network states. And we've been doing this over time, even over Facebook and all of the other social media. It's moving towards these online societies. And what crypto did was enable digital online societies to also have a system of money and accountability and finance and value transfer and all of this stuff, which is a new layer onto the internet. So we've created, and I've talked about this in the past, a parallel financial system. So let's call that crypto land. In the other world, which we can call fiat world, we have this massive but broken financial system, and people still having to seek returns, and returns have generally been subpar for many in that, and it's difficult to participate. So how does so this new economy, I think of it like an emerging economy, crypto land. So how do economies work? Economies work. GDP growth is driven by population growth, productivity growth, and debt growth. Those are the three components that make GDP grow. So when you go to the fiat world, we've got aging populations and in many countries shrinking. We've got low productivity that may get changed by AI and other stuff, but it's still yet to be proven. But the old population is less productive. And debt growth stopped essentially in 2008. And all new debt growth is really just servicing of old debts. When we go to this new emerging economy, we have population growing at 100% a year, which is the number of active wallets. If you think of it, it had a massive recession in crypto land in 2022, and the population grew 42%. So it's like, okay, this is an amazing thing. So obviously GDP growth is faster. Productivity growth keeps increasing. Things like smart contract was a new increase in productivity for crypto land. Let's say compressed NFTs, maybe what Solana's doing with Firedancer, maybe ZK proofs, all these things are productivity increases. And then debt growth, well, we've just wiped out the debt from the last cycle, so we're going to rebuild debt again this cycle, because that's what humans do. They love a bit of debt. So now what you've got is this new digital economy that's not easily accessible to everybody. Not everybody's got a passport to go there. And then you've got this fiat world. And what this ETF is a trade agreement that fiat world people can go and invest in crypto land without having to be a native. They don't need a wallet. They don't need to self-custody. They don't need any of this stuff that we all go through every day as part of our lives because we're citizens over there, but they're not. But what they've got is a free trade agreement. So free trade agreements really are all about, where do I get my highest return on capital? So people want to do free trade agreements with India because it's a growing population, large economy. It's the same thing. Fiat world will be saying, well, am I going to get a higher rate of return over in crypto land? In which case, I'll put some of my money at work there. That's why this is important. It's not about a single event of, we're just going to bring RIAs in. It's something much bigger. It's bridging these worlds. And then as the money comes into crypto land, it then finds its way into the other states within crypto land, whether it's Bitcoin land or whether it's ETH land or Solana land or whatever it may be. And it gets reallocated on the risk curve. Some of those are smaller emerging states and some of them are more established. So when people think of it like that, it's just an emerging market that's opening up for people to be able to invest.
Based on prevailing trends and ongoing discussions among cryptocurrency investors, it appears that the narratives shaping the upcoming bull run will be as broad and multifaceted as Raoul is forecasting. Some of the prominent sectors dominating bull run conversations encompass casino and gambling, automation and trading bots, meme tokens, decentralized perpetual exchanges, layer 2 scaling solutions, interest-free loan protocols, social finance, the anticipated convergence of social media and finance, gamification, and artificial intelligence. These diverse sectors, among others, are poised to drive the narratives of the bull run, fueled by the inflow of tens of billions of dollars in institutional capital. Returning to Raoul's interview, he further delves into his perspectives on the significant catalysts propelling the bull run and provides insights into the broader macroeconomic landscape in the United States.
Again, we've got this foreign direct investment coming in. So where is that capital going to be put to use? And what is going to be the big unlock? My mental model for this particular cycle is the everything, everywhere, all at once cycle. Because if we think about it, $67 billion went into VC, into the space in 2020 and 2021. That money has been given out to founders who are building all sorts of applications and projects and everything else. Some of them will be infrastructure layer, some will be applications layer, and everything in between. And if you see the focus of where most of these teams are working on, it's kind of everywhere. So we're seeing the asset management that the fiat world companies are building on rails from crypto land. So, this is Franklin Templeton. This is all of these people looking at tokenizing real world assets. I think that starts, the first wave of that starts. Then we're seeing at the other far end of the spectrum is everybody's focused on gaming because there's a huge audience there. So somebody's going to crack gaming in some respects. And pretty much every protocol has got teams working on that. We've got in the middle, things like compressed NFTs and Solana, I think are a much bigger deal than people understand because I think it allows for ticketing. And ticketing is at scale consumer application of blockchain, of which you don't need to know it's blockchain, which is what the space has been waiting for. We've seen some attempts at social media and other sides of that. Maybe we'll see more of that. The brands haven't stopped. So we're still seeing the luxury fashion brands in the NFT space. And I think we'll see a continuation of that. We've also seen the car companies, sports teams, and others. So I think that continued space builds out as well. So I think it's more the applications of technologies than technologies. I think we've also got the identity idea that's, there's WorldCoin, there's a few people who've started in that space, and then using zero knowledge proofs, which came around in the last cycle, the applications layer from that. So I'm just thinking it's actually going to be broader than people imagine. And it's going to be more inclusive because we've now got this trade deal, the ETFs, because I think, we've got the Bitcoin one certainly coming, and it's a pretty high chance we'll get the ETH one as well.
Let's say the next 6 months or so, how do you see the macro picture affecting the crypto markets?
Yep. So my crypto markets are forward looking. So most people are saying, well, we're probably around a recession. We're seeing unemployment go up, blah, blah, blah. Crypto knew about this last year because it's forward looking. It actually trades on liquidity conditions. And I do a lot of macroeconomic research at my research company, Global Macro Investor. And for us, the liquidity cycle just keeps going for the next 2 years. So we will see a bottoming of the economy, maybe Q1, Q2 of next year, that people will visibly start to see things improving, but the markets are already trading it. The equity market's already almost back at the all-time highs, crypto market's ripping because they're discounting this. If we live that 6 months in the future, are the Fed likely to be raising rates or cutting rates? Cutting rates. At worst, they don't do anything. But the probability is for easing of liquidity conditions. Is there a chance, because we're going to an election year, that they stimulate with fiscal stimulus? Pretty much 100% chance they'd like to buy votes. So 2024 is all about stimulus and economic recovery. That's a very, very, very good backdrop. And that's the transition from crypto and macro spring into crypto macro summer. And that macro summer, crypto summer, is we're starting to see growth pick up, but inflation's not picking up yet. It's still falling from the lagging effects of the old cycle. So inflation is not a problem, growth is going up, and liquidity is coming into the system. That's like the perfect environment.
Regardless of the narratives that dominate the fiat world, it is already certain that these narratives will be substantial, and the resulting price gains even more significant. In one of his recent posts, Raoul delves into the inevitable convergence of the fiat and crypto worlds, examining the implications for crypto assets and associated projects. He emphasizes the interconnectedness of the crypto and fiat worlds through global liquidity, both existing within the global economic system. When the global economy injects liquidity and expands, it permeates both the fiat and crypto worlds. However, Powell notes that the crypto world consistently outperforms due to migration and productivity over time. Additionally, asset prices in the crypto world tend to rise faster than those in the fiat world due to the comparatively smaller size of the crypto economy. For instance, a $100 billion inflow, which is 0.2% of the total assets in the crypto world, can have a substantial impact on prices given the lower liquidity of crypto assets. Powell underscores that these dynamics are rooted in economics and mathematics rather than being mysterious or speculative. Share your thoughts on Raoul Pell's interview and predictions for Bitcoin and the broader crypto industry in 2024 by leaving your comments and observations in the comments section below. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.